Gentlemen, boys and girls, and children of all ages, you are now tuned in to the Investor Show. As always, this is your gracious host, the Prince of Investing, coming to you guys and girls live all the way from the beautiful state and city and state of Denver, Colorado. If you are catching this episode live here on YouTube or Facebook or whatever, don't be a stranger. Go ahead and tell me where you're from. Comment, tell me where you're from, and we will announce that in the roll call. In the roll call, I don't want anybody to be a stranger. If it's your first time ever tuning in, definitely stop by. If you're a loyal, faithful that's been tuning in for the last couple of days, weeks, months, years, or whatever it could be, stop by and say hello. So tell me where you're from at the 3 minute mark. That's when we go through and we acknowledge the roll call. But first, before we get into the roll call, let's talk about what our topic is going to be about today. Today we got some very interesting stuff going on. I'm going to go over a lot of reports today, right? I love to teach you guys and girls how to fish. So that's what we're going to do. So pretty much the market today, we've seen a lot of different. It was a little choppy today, where we see the market go up and down, but it ended slightly up at the end of the day. But we're going to go over the jobless claims reports. We had the jobless claims report that came out. We had the oh my God, I forgot the topic of it. Builder confidence. We're going to go over builder confidence. We're going to go over housing starts, building permits, leading economical indicators. We're going to read each one of those reports, not verbatim, but I'm going to read the report and I'm going to tell you where to get it from and what does that mean. And a lot of it has to be built around real estate. So as of yesterday, we know the retail sales report came out, but that wasn't too shocking. Everybody know retail will probably go down because nobody's really shopping out and about like that. Of course, companies like JCPenney will have problems. So today is going to be a very good episode because you're going to learn a lot about reading and learning how to fish for yourself. So, and what I mean by that, we're going to go to a lot of different, not a lot, but we're going to go through a couple different government sites. We're going to go through the government sites and we're going to get the information from the horse's mouth, see what they're saying, see where this economy is going, right? And then also, I'm going to give you guys a pretty good outlook on the direction of the economy that I think is going to go. Is it going to be an L shape? An L shape meaning that we've seen that big drop from 29,000 points all the way down to 18,000. We dropped down. An L is when it drops down, then it just goes flat. We definitely don't want that. So right now we're in a situation where we were up high, we dropped down, we're coming back up. That's a V shape. Now, is this going to be a V shape or is this going to turn into a W? That's the big question everybody wants to know. I'm going to give you my thought process on investing through that and investing through that particular strategy. So, thanks for everybody for tuning in. But for now, for the people that are catching this live that has commented, I'm going to go through the comments and we're going to do the roll call. So, we're going to do the roll call for everybody that's checked in. We're now at the 3 minute mark. So first, we got Michael. He said he's right on time. What's up, Prince? I hope you and yours are well. Yes, me and my family, we are doing pretty good so far. It's a nice snowy day here in Denver, Colorado, but still blessed day. I'm taking it easy and quarantining, doing some studying and reading. Shout out to you, Mike. Thanks for tuning in. Harloon Financials, what's going on? He said, "What it do, Prince? Palm Beach, Florida, checking in. What's going on, Harloon Financials? Nice." We got Wayne from Chesapeake, Virginia. Nice, nice. Yvonne. Okay, there we go. That's a lawyer right there. Yvonne, hi, Prince, checking in from Minneapolis. Nice. Kevin, I already know you from. Hi, Prince from DC. You think we're seeing some resistance in the market heading towards a decline? So what you're talking about, Kevin? He said we're seeing some resistance. We're seeing the market is going down, but it's kind of fighting. You got a resistance and a support, right? So level for the technical investors out there, and we could be seeing some potential resistance. A lot of people think we have another big drop. I personally think we have another big drop, but I'm going to show you how to invest around that, and to get around that with the investing, right, and leaving your emotions out of this. And I'm going to give you my thought process behind that, right? So y'all stay tuned for that. But thank you for checking in from DC, Kevin. Athena said, "What's up, P Money? What's going on? What's going on there, Miss Athena? I think she's down in Georgia, Atlanta, Georgia, I think." So we got Michael. Hit the like button, Money Family. It helps with the YouTube algorithm. Yeah, thank you for that. This is my 7th year on YouTube. Of course, on quarantine, so I do a lot of live shows now. And I think August will be actually my 7th year, but I just crossed over 30,000 subscribers. So I want to thank each and every person out there on YouTube. 30,000 subscribers on YouTube, 20,000 on Instagram, And with all my Facebook pages combined, I think it's like 115,000. So I definitely thank everybody for tuning in across the globe and the world. You guys are the ones that have allowed me to do things that I've been doing. So definitely hit the like button and help out the algorithms any way you can, and share it if you think it's a good show. We got Miss Taku. He said, "Do you have a fixed schedule for your live shows? I can hardly find you live." Taku, I'm horrible about that, man. I got to get better at getting a set schedule because I tailor the topic around what's going on in the market. Maybe I should get better at that. I tailor the topic around what's going on in the market. Like today, oh, the market went up 100 points, and this was the big topic. I kind of tailor around the market, so it's kind of 2-3 hours before I go live. It's not as set as I should. Maybe I should. I'm going to work on that. So, thank you for catching me in. But yeah, I don't have a particular set time. Ricky B, he said GDX thoughts gold. Oh, okay. Gold. Yes, good one. I'm surprised gold is not skyrocketed yet. But yeah, definitely. I like to use IAU. Um, India Alpha Unicorn. IAU is the one I like to use. Okay, Huey Ho, what's up from Hawaii? We got Huey Ho in here. All right. Ricky B, he said your boy from the Hen State. What's going on, Ricky B? Ricky B in the house. Sluggy says Amazon and Netflix are at an all-time highs. Yes, they're thriving. Companies that are thriving in this, I wouldn't hold off on that. I'm going to get into companies that are thriving in this market, but Amazon and Netflix are too. Taku from Princeton. What is your live show schedule? I don't have. I'm bad. I'm bad on that, guys and girls. I just, unless it's an interview, unless if it's me going live, I just kind of come in and go live. But unless it's an interview, like tomorrow, I have an interview that's scheduled. I think it's at 1:30. I think it's at 4:30 Eastern time. But that's scheduled. I will schedule that. But other than that, if it's me going live, it's kind of like, hey, if I'm free, I kind of go with it, with my homeschool and all the good stuff. So I'm gonna work better on that to get y'all the show so y'all know exactly when it's coming. If y'all asking for it, I gotta give the people what they want. That's why I'm live now. I'm not a big live person, but the numbers don't lie. YouTube said, hey, these guys like you live. These guys and girls like you live. You gotta go live. So I gotta give y'all live, or I'm gonna disappear one, right? Okay, shouldn't the Fed let the market fall? Interest rates being this low is bad. High leverage companies are, uh, you know, I would agree with that. The Fed is trying to do what they can. They're pumping money into the market and they're lowering interest rates to stimulate the economy. It's a classic move that we always know what they do. And every time they pump money into the market, gold goes up. Every stimulus. That's why I said IAU. What's going on coming in from Nashville? Okay, JW, nice, nice. Get through this roll call. What's up, brother? Here from Wall. Hello from Wall Street. We got Bones from Wall Street. Nice, nice. Okay. We got Michael. What's going on, Prince? Hope all is well. Stay out there, everyone. Nice. We got James Bond. He said, "Is it the W for the upswing on the market?" Yes. Is this the W for the upswing on the market? It could be. It could be. So most people are saying, "Is this going to be a V or is this going to turn into a W?" Right. That's the question. Shan's checking in from Memphis, Tennessee, doing my research on the major sectors, getting my money right for the bigger dip. All right, there, Miss Shane. I hear you. Okay, nice. We got Miss Thelma from Princeton. Nice. Thank you for checking in, Miss Thelma. Woke One says, "Hi, Prince. Been waiting for you to speak more on this topic. Got my money on the sideline, waiting for DRV." Okay, we're gonna talk about DRV too. Gold is skyrocketing percentage wise. Yes, I do. I do like gold. Gold is doing its thing. I do have IAU and a couple of my portfolios. So, all right. So now let's jump into the topic, guys and girls. We're going to jump into the topic today. We're going to go over some of the reports that went on. Right. We're going to go over some of the reports that went on. We're going to talk about. Let's jump into it. Let's go to real estate first. I should have already had this, but I'm going to share my screen, ladies and gentlemen. And I'm going to share my screen. We're going to go over some of the reports that came out today. So the first one we're going to look at is jobless claims. Let's go straight to jobless claims. This comes out from the Department of Labor. I'm teaching you guys and girls how to fish. What did the Department of Labor say? The Department of Labor put out a report every Thursday at 8:30 a.m. Eastern. It puts out a report on jobless claims. So if you're interested in what's going on with jobless claims, you have to go through the Department of Labor. Now, once the Department of Labor Once the Department of Labor released the reports, of course, everybody else is going to talk about it. Okay. Give me 1 second. So we're going to go through jobless claims first. All right, let me pull it up here. What they like to call it, the weekly uninsured. Yeah. So we're going to go through the jobless claims report. We're going to go straight over here. I'm going to share my screen from the news release from DOL. Anybody can look this up. You should be looking this up if you to become a more studious investor to see, because why is the jobless claim is important? The jobless claim is important because of it tells us everything that's going on in the economy, right? I'm sharing the wrong one. I'm looking for the news release. There we go. Making sure I'm sharing the right screen with you guys and girls. So jobless claims is the first one we're going to look up as soon as I get it right. All right. So right here, ladies and gentlemen, this came out, as you can see at the top, 8:30 Eastern, Thursday, April 16th. This is coming directly from the Department of Labor, right on their website. This is their jobless claims, right? This comes out every Thursday, and you can highlight it here, and I'm going to read it, right? So it says, in the week of April 11th, the advanced figure of the seasonal adjustment of initial claims was 5,245,000. A decrease of 1.3 million from the previous week level. So they're saying they had a little bit less people file for jobless claims, but 5.2 million people did file for jobless claim. The previous level was revised up by 9,000 to 6.6 million to 6.615 million. The moving average is 5.5 million, right? So pretty much this is a pretty standard jobless claims relief. 5.2 million people went in and filed for unemployment benefits. That's what a claim is. Unemployment numbers don't come out until the first week on May 8th, right? So this is a hard data report. It's going to give you more about the jobless claims. But when I look at this, if people don't have jobs, I know people are not going to buy houses. People are not going to buy cars. That's a great indicator, a leading indicator where the economy is headed when people don't have jobs. Now, this could turn around. People could get back to work. I don't know. But we're looking at the initial report of jobless claims. So now we have 5.2 million people that file for jobless claims. Not good. I'm thinking unemployment has to be in the double digits. We get our last unemployment numbers came out earlier this month. I think it was April 4th. We was up to 4.4. I think easily with these numbers, where they're looking right now, we're going to be at 10. We're going to be in like 10% or higher, probably about 10 to 13% unemployment, right, which is extremely high. Unless president can get this economy back open, they come with some new thing. So that's the first thing we looked at. That's the sawdust. I like to call it just dry report of Department of Labor job disclaim of 5.2 million. Now, next up, ladies and gentlemen, we're going to go into which one we're going to go into next. And then we're going to go into the future as well. Now we're going to look at builder confidence, ladies and gentlemen. So this is real estate. So real estate, when I talk about builder confidence, what they do when they talk about builder confidence, they're talking about people's confidence in building houses, people buying houses, selling houses. So they get builders together, and it's tracked by make sure I say their name right. It's the National Association of Home Builders. The National Association of Home Builders, every month they get together, they get builders together, and they get people's confidence in building new houses, houses being sold, people buying new houses, and they give an outlook for for 6 months, and they've been doing this for 30 years, right? This came out yesterday. I did a live yesterday, but the live yesterday was for what you call it. What was the live yesterday for? I did one on how to invest for a child yesterday. So I didn't do a market review one yesterday. But this one here, this report did come out yesterday. I'm going to go over it with you guys and girls, and I'm going to share my screen here with you so you guys and girls can see it as well. I'm going to share my entire screen so you guys and girls can get a better view of what I'm looking at, right? So this is called a Builder Confidence Index, all right? So this came out yesterday, April 15th. This came out from the National Association of Home Builders Association, right? So, and it's, it's have a Wells Fargo's involved in it too. So let's first, you got to know what you're looking at. So let's take this information here, right? We're going to look right here. I'm going to read that directly. This information is derived from a monthly survey that the National Association of Home Builders has been conducting for 30 years. The National Association of Home Builders and Wells Fargo's Housing Market Index gauges builders. It gauges builders' perception of the current single-family home sales and sales expected for the next 6 months. So pretty much it's telling you what does this index tell you. They grade this as good, fair, or poor. The survey also asked builders to rate the traffic of prospective buyers as high, very high, average, low to very low. So what this does is this gauges people ability to sell homes or homes being sold and people buying homes from builders. Scores for each component is used to calculate the index, right? So right here you're seeing, we're going to read the one that just came out yesterday. Reflecting the growth of the coronavirus pandemic, builders' confidence in the market for newly built single-family homes plunged 42%, which is really 22, not 42%, 42 points, which is 22% in April. So, according to the latest National Association of Home Builders market or whatever, the decline in April is the largest single monthly change in the history of the index and marks the lowest builder confidence reading since June of 2012. It is also the first time the confidence is below the key break even reading of 50 in June of 2014. So right here, this is a little chart. They're pretty much showing you when you're looking at their index, they're showing you this steep fall off. You see this, ladies and gentlemen? This steep fall off and people's ability to confidence in new homes for the next 6 months. Home people in the real estate industry, builders don't believe houses will sell that much, and they don't believe that people will buy that many houses. They don't think houses will sell. They don't think people will buy. And of course, this is from the impact of the coronavirus. So you've seen a steep market of how the next 6 months outlook coming from the National Association of Home Builders, right? So teaching you guys and girls how to fish. Yes, you're going to see other reports written off of this, but this is exactly where they're getting it from. This is coming directly from their site, eyesonhousing.org, and it tells you exactly what they feel about it, right? So that's one of the ways you can look at it. Now, that's home builder confidence. The next thing we're going to get into, the next one we're going to get into, we're going to look at building permits. Building permits. Before a house can be built, you must have they got to first put in a building permit. First, you put in the building permit, then you start building the house, and then you complete the house. So they do monthly reports on how many building permits or how many people put in building permits. That could be a good indication. If nobody's applying for building permits, then that means nobody's planning on building anything. So we look at building permits. We're going to look at that in a second. How is that reflecting? Then we're also going to look at home starts, because once you have a building permit, now you got to permit to build the building, and then you got to start building the home. Then once you start building the home, they also track home completions, because you don't want nobody how many times you've seen somebody start building something, then they stop doing whatever they were doing because maybe they lost money, they lost budgeting, demand went down or whatnot. So they follow how many people in the real estate market, they follow how many people are applying for building permits. Then they see how many people started houses. Then they see how many people completed houses. So we're going to look up that report here in a second. And this report is put out monthly as well. What site was this one? Oh, the Census Bureau. Yeah, the U.S. Census Bureau tracks this particular index. That's when it does get a little confusing. You have to know who reports what. So we're going to take a look at that one. We're going to take at the building permits, the housing starts, and the completions. But before I get into that, let me get into some of you guys and girls' comments who are commenting live. 1 second. Who has something to say here live? Got Mr. Lawson said, "What's up, bro?" from California. Nice, Mr. Lawman. Thank you for tuning in. David says, "Should I jump into Tesla?" It depends. It depends on the Tesla thing. You got to understand. Do I have? I'm going to be honest with you. Do I have Tesla? Yes, I had Tesla. I got Tesla at 600. It ran up to 900. Then it dipped down to like 800, 700. Then I sold it. Then I got back in around like the 600 mark again. Then it dropped all the way down. I want to say to 300, and now it's back to 700. I think the last time I saw it. Been a wild ride with Tesla, but Tesla's one of those companies. It's unprofitable. Uh, I'm wasting water all over myself. Lip too big, I guess. But Tesla's one of those companies where it's unprofitable, right? So it's very risky, very risky. It's $700. So it depends on where you at in your portfolio, how much money you got in your portfolio, and what you like, and what's your risk level and what you like. Fundamentally, no, it's not a buy. Fundamentally, when you look at the fundamentals of the company, it's losing money left and right. But it has this cult-like following where institutional investors believe in the future, and I'm just kind of riding the wave, right? But yeah, fundamentally, if you're a fundamental investor, no. If you're a technical person and you like to just ride the wave and you're a high risk level, yes. It doesn't pay dividends. It's not a profitable company. It's losing money left and right. But the good thing about it, the reason why I gave it a run, it has a lot of room to grow. Versus a Ford is pretty mature. GM is pretty mature. Tesla has a lot of room that they can potentially grow. I want to see how they do it, and I love all the other aggressive things that they're doing too. So that's my little takeaway from it. Mark Albert, will we crash even lower due to the coronavirus? Guys and girls, I have been having this dilemma. When I look at the market and I look at unemployment, I'm looking at real estate, I'm looking at unemployment, I'm looking at real estate, I'm looking at companies' profits. We started seeing profits come in, earning reports. Bank of America earnings wasn't that good. All the banking people are hurting for the most part due to loans. They're stopping loans. So when I look at the economical data, yes, I think that we got further to go. Then the other side of me, I see money flowing into the market. I seen this coronavirus come grab the economy. Stores are falling, and I mean not stores are falling, but stores are closed. Companies are closing up. J.C. Penney was barely struggling in the bull market. Now they're really struggling now, almost towards bankruptcy. But the economy is not dropping that much. And I just have to admit, ladies and gentlemen, I don't know if this is going to be a V-shaped return or it's going to be a W return. But let's think about it. Let's think about this smart. If you think about this in a smart way, um, you're going to look at the market. We know it's a 90 to 95% chance. Don't quote me on that because I didn't do all the research on it. But it's like a 95% chance the market will return to higher highs. I don't know when. I think by next summer we'll definitely be there, but the market will return. I know that. Now the question is, we know it's a 90 to 95% chance this market is going to return, but now everybody's questioning: is there another dip before we take off? Now that's a question I don't know because I've been waiting on that dip. I've been sitting back, waiting, stretching my head, looking at unemployment numbers. We saw in manufacturing slowed. We know manufacturing is slowed. We know retail sales are slowed. Retail report came out yesterday. I'm not going to go over that because it's pretty common sense that we know that retail is probably down. But I'm in that dilemma where I'm thinking to myself, it was 18,000 the bottom in March 20th. I think that was. Did we hit the bottom in March 20th? I thought we was going to go down to 15,000. But we would have got there if they didn't hit those circuit breakers. But okay, so now I have to make the educated decision. Do I wait to see if there's another dip, or do I invest now? Me, the smartest way to do it is statistics. It's like, remember those questions you get in math class? It's a blue ball inside of the bag. If you reach your hand in here, what's the probability that you're going to grab a blue ball? I know I'm 90 to 95% chance the market will return and the bull will win. The bull will win in the long run. Now, that bull could come out in March. That bull could come in April. I don't know where that bull is. I don't know what his market is going to return. So the smart me said, Prince, you're a long-term investor. Ride the bull. But what if the economy takes another downturn? Sorry, guys. I don't know what's going on there. If the economy takes another downturn, I have XP in my portfolio, right, to take advantage of another downturn. But since I'm a long-term investor, I'm riding the bull now, right? It's like I'm sitting on the sideline, waiting on the train, and I don't know when this train is going to take off. So I'm like, you know what? Let me just get on this train. I know it's going to leave, but I don't know when it's going to leave the station. I can sit here and wait, and the train starts taking off, then I try to run it down or whatever, but I don't know. Maybe I'm a little early. Maybe I may not get the best price, but I continuously, and I can invest if we do have another downturn. I have capital to be able to take it and invest. If we do, this is how I look at it: invest now, ride the bull. If we happen to take another dip, you better invest everything, because either I believe we're going to do a V or we're going to do a W. Like right now, we went down, we're up here, and everybody's wondering, are we going to go back down before we go up, or are we going to stay here and just go straight up? Nobody really knows, right? Everybody's anticipating another dip. So with my look, I don't know if this is going to be a V or a W. I'm not that smart. I don't know. So the smart way to get around that, don't try to time the market, ride with the market. I know the bull will win. It's just a matter of time when this bull is going to win. So I'm going to ride the bull at the I got SPXS to take advantage of another dip a little bit. I'm going to sell that, and I'm going to put more cash into the W. Because if we go down again and we hit that 18,000, or we drop lower below 18,000, and we really hit the bottom, you have a 98% chance that is the bottom. If we drop again, you got a 98% chance of knowing that's the bottom. But right now, where we're sitting at now, I don't know. I really can't say. So the smart person would just ride the bull in the meanwhile. Act like 18,000 was the bottom, ride it, and if you got more capital, when it really takes it, jump into it even more. That's my thought process. Tony, what's going on? Tony, now he says, "What's up, Tony in DC?" Nice, thank you for checking in. Kevin said, in the past few weeks, every time jobless reports came out, the market went up 400 times. This is the first Thursday, it didn't cross 100 points. That is true, because I think Kevin, everybody's expecting it. Everybody's expecting already. Everybody's expecting millions of people to be out of jobs, right? Everybody's already expecting April to be a horrible month. Everybody's expecting Delta, Southwest Airlines to have horrible earnings reports. It's kind of already cooked into the point. It's not a surprise. Nobody's like, oh my God, people don't have jobs with the economy shut down? Sell your stock. No, people already accounted for that. So that's my thing over that. But yeah, you're right. We haven't seen them. We haven't seen the market react to jobless claims. Now, unemployment numbers might be a different story. Silver Line says, "Hi in Staten Island. What's going on at Staten Island?" Max B said, "But we don't have full numbers. Some people couldn't apply." Yes, that is true. Due to computers, they did put that in the report as well. Look at Max B. Max B out here reading the reports. I see you, Max B. Yeah, but yeah, that's correct. Some people couldn't apply because of millions of people are trying to do it at the same time across the nation, across the country. But we're going to get those numbers come out May 8th. We're going to get real unemployment numbers. These are just claims. Ken said he just brought some LUV. What are your thoughts? LUV, guys and girls, that's Southwest Airlines. The one that I brought today was I didn't get a chance to get it today. I meant to get it today, but I lost track of time. Market closed on me. But DRV, I definitely think that real estate is going to feel some pain, and I want to take advantage of that. So LUV, yes, that's the airline stock, Southwest Airline. They just got bailed out. I think they're down about 50% right now. They're down about 50%, even after the bailout, like at $37. I'm not a big fan of airlines when they're up and running, but I can see the thought process of people saying, "Hey, let me just jump in here and get a particular stock." So, but it's out of out of the entire airline industry, Delta, Southwest Airlines, Southwest Airlines had the most cash and it had the less debt. That's who I'm rolling with in my particular thing. So yes, I'm not against that one. Chuck B chilling. What's going on, Chuck? He said he's trying to buy Berkshire B, but he said, should I just do it or wait till May? Woo. To be honest with you, Chuck B chilling, I will just go ahead and get it. Berkshire B is not one of those. It doesn't pay dividends. It is not a fast grower. It's a long-term stock, right? When you pull the calendar, when you step away from the calendar, you're like, whoa, this thing is really moving. But when you're up on it close, you're like, man, it don't really move like that. That's just, for people who don't know what Berkshire B is, that's Berkshire Hathaway Class B shares. So yeah, that's Warren Buffett's company, Berkshire Hathaway, out of Omaha, Nebraska. We got Dan from Long Island. Do you like GE cheap? No. No. GE Ford? No. Struggle bus. Wayne, how do you get information from the Department? How can I get information from the Department of Labor website? Go to dol.gov, right? And then go to news, and up on the news, go to press releases, right? And all their press releases come out right there on their website, right up on the news releases. So that's dol.gov. He gonna check me, say, yeah, I hate you. I'm not dealing with that. I'm not, and the reason why I have nothing personal against GE, I hadn't even sat down and really looked at the company. I know it's cheap, but the thing is, I know the company is struggling, and I've done that before. I've been burned in the past with jumping on struggle companies and hoping they get it right and hoping they turn around. It was at one time I jumped on JC Penney because it was so cheap. It was at $13 at the time. Now it's like a penny stock. And I was like, oh man, it's gonna turn around, or whatever company it was, whatever struggle company that was out there. And I turned around and it burned me. So, but when I look at it, when I compare it, it's like, well, why would I jump in a company that's unprofitable, struggling in the bull market, and now you're really struggling now, and I want to hope you get it together. So, do I want to get with a company when all the companies were going up? These companies were staying still or going down. Why do I want to even look at you? Everybody else was doing good, and you were going down. How can you explain that? The market is doing this, you're doing this. I don't want to be on that plane. I want to be on a plane that's going up. You know, that whole struggle. Hey, I'm trying to get same thing with companies. Guys come to me, hey Prince, man, I got a new startup. We're trying to raise some money. Nope. They're sorry. Right? The reason why is that, think about it, it's like a company, right? If you got person A, your cousin call you and say, hey, Chuck McChillan, man, I'm trying to start a record label. And I was wondering, can you give me $30,000 to help me start my record label? Right? He has all the potential in the world. You know, he has all the connections. You could make a massive return on your investment if he get it together. Right? Then you got person B. Now that you got person B, what does person B do? You get what I'm saying? What is person? Now you got person B. Hey, we're an established record label and we're looking to sell. You know, we're established. We make profits. We make return. And you can buy this company. So would you buy company B that's already established and making a return, or would you take an investment on a company that ain't gotten together, that ain't proven? I'm probably going to go with, now once you get to the top of the world of investing, then yes, you can go back. The big boys on Shark Tank, all that other stuff like that, they already made their money. They're just playing around. These are little lottery picks. They know 90% of those companies ain't going to make it, but they're giving the rest of this, giving a little money to see who's going to make it. That's play. But when you're trying to start up, I made those mistakes. When you're trying to start up and you're becoming a new investors, don't get into the riskiest stuff. Go with it for sure, though. Don't get out there with the penny stocks and company you ain't never heard of. That's for later on down the line. So that's me. James Bond, what is the accuracy percentage of the formula being reported by these companies? I haven't, about, hold on, accurate percent, what companies? You talking about the financial reports? Or are you talking about the sites that I just went through? The government sites? Or the you talking about the government sites, or are you talking about the actual financial reports? The financial reports are audited by the SEC, right? They have an auditing in there. That's how they catch people cooking books or whatever the case may be. And usually, when you read a financial report, it'll tell you if something is have it been audited or not. And if they do make an error, they will come back out and usually revisit it and say, "Oh yeah, by the way, whatever the case may be." Now, reports I'm showing you guys and girls, those are from government entities, right? Those are from government entities that everybody on the stock market is using. The data that you see CNBC reporting, Yahoo Finance, Market Watch, all of the big brands out there, financial news, stuff that's getting fed into your E-Trade, TD Ameritrade, Robinhood, Goldman, whatever you platform you use, that's where they're getting their data from. Now, their accuracy, I'm not 100% sure, but that's how the market reacts to what they say. So I hope it's good. Hopefully they ain't mess up. And usually if they mess up, they'll come back and tell you that they messed up, but I'm not sure on the accuracy. Harlem Financial, JPM, talk to me, Prince. I'm thinking about scooping up 10 shares. Smart investment. JPM is JP Morgan. Very smart. JP Morgan is a solid brick house. They are the largest investment company in the world, right? And solid brick house finances. They're going to be fine. They were doing fine before the market crash. They're going to be fine during the next market crash. Before the market crash, they were doing good. They're holding up pretty good now. Look at how much cash they got on hand. Look how much cash they got on hand versus the debt. Those are the big boys. Thinking about $98, $100 a share, something like that. But before all this happened, it was $300 a share. Sounds like a good deal to me. Oh, you still thinking about, you know what? That's what Tesla's in my portfolio. Do my son have Tesla? I think he does have Tesla. I'm almost certain. Either my son or my wife got Tesla. He's in one of those portfolios. But yes, he said he's thinking about getting his son Tesla for his 10th birthday. You know what? I like that. Because guess what? Your son is 10 and you got a decade of investing, right? Very risky, but I look at it, I wake up every day, guys and girls. I look at the world of investing and I look at the pictures of my son. I'm like, man, one day he's gonna 10 years from now, he's gonna say, Dad, why didn't you buy this company? Like I look back at my Dad, why you didn't get McDonald's, Apple, Nike? Those are companies we use every single day, right? So I know my son is gonna look at the same thing as me. So I look at it, I'm like, well, 10 years from now, would he be like, Dad, why you didn't get me Apple? Why you didn't get me Google? Why you didn't get me Amazon? Why you didn't get me blah blah? So I think about it too. But Tesla fundamentally it's a nightmare. But if you got a 10-year horizon and you want to do that, is you know, if this is your first stock you're buying, I wouldn't do Tesla. I would do something like an Apple. I would do something like a Microsoft, a company that is way more profitable, financially stable, that that's the for show dough companies, right? Or index fund. Index, you guarantee 90% of the times you're going to win in the long run. Or get you a cash heavy company that's already making money, that's already doing well. The likelihood of Tesla or Apple going down a drain, Tesla has a way higher chance, right, of going down a drain versus Apple. Now, granted, Apple is probably not going to shoot up to $900 a share like Tesla will, but starting off a portfolio, I wouldn't just be like, oh, Tesla. If Tesla was to go bad in my son's portfolio, that's not the only thing he has. Inside that portfolio, he has McDonald's. McDonald's is a big real estate company when you really look at them, right? So that's kind of my little thought on that. I don't want to beat the dead horse. Michael said, I'm still learning, so forgive me if this is a silly question. Can the Dow S&P 500 go to zero? If we go to zero, man, martial law. I mean, anything can happen, but if we go to zero, martial law. In order for the stocks to drop down to zero, that means that companies are not making money. If companies are not making money, that means that people don't have jobs. If people don't have jobs, what are they doing? We got a major problem. That means that the only thing that's going to have value, guns and bullets. That's what's really going. People think, oh, I got gold. If we go to martial law, no, guns and bullet will be the most valuable topic. Because guess what? If I got all the gold and Michael got all the guns, how you think that transaction is going to work? He's going to be like, hey, you know what? He's just going to shoot me, take my gold, steal it from me. So that's the way you need to look at it. So it can go to zero, but if we go to zero, man, you're talking 100% drop. That means the economy has way bigger issues. You see how we're acting with the coronavirus and the market dropped 20, 30%. You see how people act when the market dropped 30%. Imagine if we drop 50%, 60, 70, 80, 90. You talk about 100% drop? Man, it'd be World War V out here. Yeah, exactly. Harlem, if I said get ready for Armageddon, don't even get ready. You are in Armageddon. Jay Biz, that's my guy. I gotta do a video showing people how to buy warrants. Very smart investor, man. Buying warrants and stuff. That's another level of investing. Bone said, I've been chopping, waiting on the huge drop lower than the end. Yeah. I mean, everybody's kind of waiting on like, oh, is it going to be another drop? Everybody's waiting on the W formation because the market was up here, it dropped down, now it's kind of going back up. It could keep showing up. If it keeps shooting up, that's a V shape. If it takes another dip, we know it's going to go back up eventually, and goes back up, that's a W. So right now, people are wondering, is this a V or is it going to be a W? People think we got one more major drop. And I don't think I can make the major drop happen if we stay shut down past May. If we lose the summertime, if Disney loses the summer, woo! If people lose their summer, If we stay in this condition past May, ugh, that's when I can see the market has not anticipated for. But in the estimates, when you look at the market estimates, when you look at the GDP, ladies and gentlemen, look up the forecasted GDP, right? Look up the forecasted GDP. And before I answer another question, what we're going to do today, that we're glad you guys and girls brought that up. What we're going to do today, we're going to talk about what report is coming out tomorrow. I'm going to share my screen here. What report is coming out tomorrow? Tomorrow report is the LEI. This is the leading economical indicator, right? So this is the leading economical indicator. It is put out by the conference board. They put it out every month. And as you can see here, the conference board's leading indicator for the U.S. increased slightly of February. So this comes out from the conferenceboard.org. The leading economical indicators tell you where the economy is going. Leading indicators. But i.e., when you look at things like unemployment, manufacturing, those are sales. So when they see people don't have jobs, I don't have to look at the rest of the economy because if people don't have jobs, there's no money, if there's no liquidity. If a company doesn't have money, I know they're not buying anything, right? They can't boost their inventory if the company don't have money. So they look at unemployment. They look at I'm trying to think of all these other economic indicators. Another one is manufacturing. If people are not making things, I know you're not going to sell anything. So this one comes out tomorrow. You can see in February it was slightly up, but this one comes out tomorrow. This will probably be big talks when they look at the leading economic indicator. So you can come here to the conferenceboard.org, and it's going to be tomorrow. I guarantee you, I bet any money on it, you'll see a report on it on CNBC and all the major outlets starting tomorrow. Oh, guys, leading economic indicator for March indicates the economy has slowed and is not growing and blah, blah. But I'm teaching you guys how to read it here yourself. So I would go through and read this February one, but it's kind of obsolete, right? Because this was way before the coronavirus took place. So, but yeah, leading economic indicator is due tomorrow, ladies and gentlemen. So I hope that helped y'all out too. Where was I at? Okay. I want to make sure I don't miss anybody. Making sure. Okay. Okay. Kevin said in 2008, the bear market was a slow, painful beating, but for the market to decline by 10,000 points in a few weeks is insane. Hard to see another quick dip, but maybe a slower dip similar to 2008. Yes, this is the fastest the stock market has ever fell off ever, right? You're talking about 36, 37 points immediately. And the thing about dips, they happen fast, they come out of nowhere and they hit you hard. Boom, right? So yes, that's a good one too. You know, to compare it to. So, but some people look at it as a Black Friday sale. So what I do is I follow the money. I follow the money index, and I'm not smart enough to know if there's another dip coming, but I do think it's a dip coming in real estate. Oh, Michael says, "What's up? Thanks for the insight." He's talking to Harloom. Bone says, "What's scary to me is due to the number of stocks that should go down rose and stocks that go up fell. I'm feeling numbers may hit a '08 low. I'm using the end of the 15 as my lows. 15 as my low, but certainly they'll be prep for '09. Oh yeah, I get what you're saying. He's using the end of 15 as his lows and a prep for '09 on a drop pre '09. Okay, yeah, that's a good one, Bones. James Bond said yes. I think he was talking about something I was talking about earlier. Kevin said he got JP Morgan at 87. Oh, I didn't know JP Morgan was down to 87. He got JP Morgan at 87. I had to grab them. Couldn't wait for the next dip. Yeah. Yeah, 87, JP Morgan, you're going to do well. Just hold on to them. When we get all this crap cleared up, you're going to be fine. There's so many ways you can be fine too. Harloon Financials, I was so tempted to pull the trigger today on JP Morgan. He's talking to Kevin. JP Morgan 52 low was 142. That means 52 high was 140. So in the last year, how high it was 140. Tech Monkey said, "Hi Prince, sorry, just got here. Do you think the market is going to dip big?" July GDP reports. So yes, you know what? Let me look this up. So GDP is a gross domestic product, right? And everybody knows the gross Why is the gross domestic product is important? It's important because it tells how your economy is doing, how much does this economy produce. So if you have 2 quarters of a declining GDP, that means you're going to go into a recession. So I want everybody to go out there and Google GDP forecasts, right? So you already know what the forecast is, right? Okay, I just typed in one, and it said the U.S. GDP will slow to 2.0 in 2020 from 2.2 in 2019. Let's look at Q2 GDP forecast Q2, because of course the economy is shut down, so we know second quarter is almost guaranteed to be, uh, you know, we already know the second quarter GDP is going to be down because we haven't done anything, right? So third quarter GDP, what's going to be third quarter GDP? We know second quarter is already down. Here we go. Let's take a look, ladies and gentlemen. I'm gonna give y'all some more information from the conference board, ladies and gentlemen. I'm gonna share the screen here. Where is it at? Mm-mm. Okay, here's the conference board. They're giving a U.S. forecast. So from this was updated on April 9th. On April 9th, they said the U.S. economy will contract 3.8 to 7% in 2020. So they're looking at the economy to retract. Also, here what they're saying right here: summertime V shape, right? They're looking at a deep contraction, V shaped recovery. We just got through speaking about that. Assuming that the peak of the assuming that the peak in the COVID-19 cases would take place in early May, creating a deep economic contraction in Q2, especially for consumption, while we see a strong recovery in Q3, annual GDP growth will contract by as much as 6%. So they're looking at the economy is going to go down. They already know Q2 is going to be a mess. And they're looking at, hey, we're going to peak in coronavirus cases early May. Then maybe by Q3, we can turn around and do a V shape, right? And they're expecting a recovery, as you can see right here. They're looking at a strong recovery will happen in Q3. Annual GDP will still be down. So they're thinking we're going to start recovering in Q3. So people don't know what the quarters are. The quarters start in September, October, November, October, November, December. October, November, December, Q1. January, February, March, Q2. April, May, June, Q3. And you got July, August, September, July, August, and September is Q4. So they're saying Q3, which is May, June, not May, June, but April, May, June is when the economical board, the conference board of economical forecast, is when they're looking at a recovery. So they're looking at a recovery in the summertime. They're looking for a V-shaped type recovery in the summertime. Make sense, guys and girls? Hopefully that helps you out. Dropping jewels today, Prince. Thanks again, brother. Chuck B. That's what, man. Come on, man. Chuck, man. Come on. I've been doing this. I need to start put some respect on my name, man. This is year number 7. Well, I appreciate it. Thank you for the info. That's what Mike says. Okay. Stock trader said, "What about BTC?" I'm thinking he's talking about Bitcoin, right? I'm done with Bitcoin. Like I'm not a fan of Bitcoin. I always wonder how Bitcoin would act in a market crash. Bitcoin is on the struggle bus. The simple things I can't understand about cryptocurrency, the very simple things I can't understand. A stock trapper. That's what he is, a stock trapper. I say stock trader. If you and I can get together to create a Bitcoin, a cryptocurrency, how does it have value over the other 1,000 that exists? How does it have value? If I had a money machine at home where I can create dollars, the value of the dollar would drop. If you had a literally dollar machine at home where you can create your own dollar and trade it and buy and sell goods, the value of the dollar would drop. That's why they had a secret service. Is it the secret service? I forgot. I think it's a secret service where they go behind people counterfeit money. Look what they did in World War II, right? They took a country's currency and dumped it on the shore of the company because they know of the country. They went to the shore, just dumped billions of dollars of this country's money. I can't remember who country did it, but it threw off the economical system. It crashed the dollar. It crashed their currency, right? So if anybody can go create a cryptocurrency, I mean, of course, you got to, nobody can't just go to Google and, oh, I got a currency. You got to put a little work into it. But if anybody can do that, how does one have value over the other one? I don't understand. I don't see why, ladies and gentlemen. I don't see why. That's the first thing. Second thing is, do I believe in the technology behind it, like blockchain? Yes. But the question is, what if the U.S. government created its own cryptocurrency? If the government creates its own cryptocurrency, what's going to happen to the other ones? The value of them are going to drop because everybody's going to use the dollar because the dollar is already established. So I can't get down with that. I don't have the logic. The logic is not making clear sense to me. So yes, it's like a lottery ticket. Can it take off to the moon and do great things? Maybe it could. Maybe I'm just too dumb to understand it. I don't know. But that's just my elementary way of thinking that nobody can see the answer. And not to mention thousands of them out there. Ivana, how about Boeing? Should I wait a little bit to get some? Get a little bit now, and if it drops, get a lot more later. That's what I would tell you, Ivana. Get a little bit now and get a whole lot more later. Don't try to time the market. The best people in the world can't time the market. If you get lucky and you catch at the bottom, great. If it dips again, you get some more. So you don't put all your money there. You put a little bit there. You buy one or two shares now. Let's say if you had $500, and I can't remember the exact price of Boeing right now. Let's say if you only go get one or two shares now. If it dips, you go get three shares. We take another huge dip, but waiting on the market, trying to time the market, in the meanwhile, collect those dividends. I just can't do it. Goldman Sachs. I haven't looked into Goldman Sachs. Harloon Financial said JP Morgan is on his list. What do you think about Goldman Sachs? I haven't looked into Goldman Sachs. I always know that. Shouts out to Goldman Sachs. I did take a tour of Goldman Sachs back in 2016. One of the senior vice presidents brought me up there. So, but no, I would definitely pick JP Morgan over Goldman Sachs. I can't do that, especially if I'm going to get JP Morgan. If you got Bank of America, like I got Bank of America, I wouldn't go load up on JP Morgan and Goldman Sachs. That's too much finance to me, right? Because now I'm tired of one sector. So when that sector gets hit, I'm really gonna get hit. He said, "What do you take on Ford? A whole sell that crap, man. I'm done with Ford. Ford went down. The only thing that was good about Ford was it was cheap. Now it's cheaper. And the only thing that kept it relevant was those dividends. Now they don't cut the dividends. Come on, man. They was on a struggle bus when the was in a bull market. When the economy was doing good. The only reason why everybody's buying Ford because it's cheap. That's why I brought it. It was like, oh, $9 for Ford. That's a strong brand. Yeah. It was good. It did good for a little while. It paid me a dividend for a while. Great dividend investor. And this thing, it started tanking and tanking and tanking. I was like, all right, I'm out of here. And it was tanking when the whole market was in a bull market. The market is hitting all-time highs, but Ford ain't moving. It's going down. Like that young jock said, it's going down. I'm like, man, come on. I ain't got no time for that. Nah, I'm good. Max B said, do you think your president will reopen those 29 states before May 1st? Your president? He said, your president. He's our president, regardless. I don't have to look at the man. I just respect the title. Hey, you the president, right? So I don't know. I mean, we'll just have to see how that one goes. I know he's talking about reopening. If he can pull it off, man, you're gonna see a V-shaped recovery. If he can pull that off. But we'll see. And we're gonna talk to Uncle James tomorrow. James Fortland will be on the show tomorrow. Y'all know Uncle James. I know Max B said he's looking forward to him. But we'll see. But he did come out, he's talking about reopen companies, so we'll see. Should I short real estate for an easy gain? Me, I don't believe in shorting because shorting the time frame and stuff like that. I go with the stock trapper. I go with DRV. That's the inverse ETF because I can limit my loss. So if you short something, your gains are limited, but your loss is unlimited. I ain't with that game. So if I put $500 on DRV or $1,000 on DRV, and it comes to crap. Real estate just takes off and the economy opens back up. We do a V-shaped type recovery. The max I can lose is $1,000, but my upside is unlimited. My upside is unlimited, but I control my loss. When you short, you can't control the loss, man. I'm not down with it. Unless y'all know something I don't know. Anthony says, "What stocks do you think are undervalued?" Man, I think a lot of them. J.P. Morgan is undervalued. J.P. Morgan's undervalued. Apple's undervalued. Microsoft is undervalued. Berkshire Hathaway is undervalued. Boeing is undervalued. Lockheed Martin is undervalued. LMT. So that's LMT, Boeing, BA is undervalued. It's a long list. You got some indexes, all the indexes. When they go back up, you got to look at how they were performing beforehand. So you got a lot of companies out there that I think that, due to coronavirus, they are sucking right now. Kevin, you pissing me off right now. 1 second, Luke. Kevin said, I got DRV on Monday. I'm up 11% so far. Man, look at Kevin. Look at Kevin. See, think about it. Kevin's smarter than me. Even though I knew the information, I told you guys and girls the information, I didn't execute. The ability to execute is what sets people apart. People think that knowledge is what sets them apart, is your ability to execute on what you know. And he executed. He saw it, he heard it, he jumped on it. Now he's up 11% on DRV. Nice. He said, "What are your thoughts on BLM?" What's going on, Luke? Luke F says, "What are your thoughts on BLM?" BLMN. Okay, give me a second. Let me look it up. Yeah. 1 second, look it up. 1 second. Well, BLM. I'm looking up BLM for everybody out there wondering, man, what is Prince doing? BLMN. Okay. Blooming Brands. 9% dividend. A nice PE ratio. Let's take a look at this on the big screen, guys and girls. Let's take a look at the BLMN. I never heard of this company, but let me pull it up on my Yahoo Finance. Hold on. I'll give it 1 second. I'm pulling up my Yahoo Finance. Boom. Blooming Brand. All right, I'm gonna share my screen with you guys and girls. All right, so we got the Blooming Brand. I don't know what much about it. Sound like a clothing line, but we could look at that too. Let's take a look at the profile to see what it is. So we take a look at the profile. It's in the restaurant industry. Oh, okay. Based out of Tampa, Florida. Okay. So let's take a look at the financials. Total financials of Blooming Brand, their total revenue is kind of a little stagnant for the most part. They are a profitable company. So cost of revenue, their gross profits are 1.6 million. Their gross profit is pretty much staying the same over the last 4 years. Uh, mm, this sounds like a little. The net profits down here, their net profits are actually growing. I like that. Net profits are actually growing. Okay, let's take a look at this balance sheet. You know what? Yeah, let's take a look at this balance sheet. Total assets of 3.5 million. Current debt. Let's see the debt looks like. Ooh, The debt is actually declining. Look at that. Current debt. Okay. Debt is declining. Total liabilities of 3.5 million. So it has a total shareholder equity of 1.7. Guys and girls, that sounds like a little just from the outside looking in. Now I haven't compared the industry, but I'm looking at the company. Is debt is declining, right? Long-term debt is staying the same. His debt is declining. Um, we looking at, let me see, let's look at that debt again. Current debt 2600 26,000 in current debt, but it has 67,000 in cash. So a nice little cash pile. Now, the one thing I don't like about their total cash, a declining total cash. Why is the cash? Why is the cash declining? 4 years ago, you had 127,000 in cash, and now you only have 67,000 in cash. I don't like to see that. Net receivables. I want to break down the whole balance sheet, but yeah, not too bad, especially since it's $8 and it's paying a nice healthy dividend. Now, what I don't like about the dividend. Now, I will say this: it's paying something like 9% in dividends. So let's look at how much is paid in dividends last year. Let's go to the cash flow statement. When you look at the cash flow statements, okay, dividends paid. Okay, it paid $35,000 in dividends last year. They should stop paying dividends and pay off the debt. I don't like that, but I'm not in that business. I don't understand it, but I don't even know that much about it. But not bad. $8, nice profitable company with a little bit of good growth on it. Not bad on that one, Luke. Yeah, Kevin said he's up on what you call it. Harlem said Ford hurt my heart when they suspended their dividends. Yeah, that was the last good thing they had going for themselves. When they suspended the dividends, it was like, man, I'm really done. Because some people, that's why a lot of people held on to it because of the dividend. Vanessa says, "Hey Prince, I'm new to the group. What is the best real estate stock?" XLRE. That's how you buy the real estate sector. You can buy real estate investment trusts, RT REITs, REITs. But I wouldn't, especially when we just did into the show, I wouldn't be too big on real estate right now. Their forecasting is not looking too pretty, right? It's not looking too pretty right now, so I wouldn't be too. I will wait. I will wait, and you can buy the sector with XLRE. That's the stock symbol. And if you could break it down, you can buy some REITs, some real estate investment trusts. But they're all getting beat up right now. It's a good time to get them, but I don't know if they're going to go worse because it's not looking too pretty right now. Look at all the reports I just read what the government is saying, right? But welcome to the group, Vanessa. Edgar, it's scary, but an investor now is the time to execute. Yes, it's scary. You're like, oh, I don't know. Is it going to be a W shape or is it going to be a V shape? I don't know. Just jump on in. It's like what? It's like putting your toe in the water. You remember when you was a kid, you put the toe in, I do it sometimes as an adult. Put your toe in the water and it's real cold. You're like, you're kind of scared. People are like, man, just jump in. That's what you got to do. Because if you jump in for the long run, you're going to win. That's guaranteed. That's like 90. A guy can walk in here, right? Who knows nothing about investing. He can just walk in here and be like, index buy every month and will beat a lot of people who know 10 times as much as more. Just like Kevin, he just called me out. I just did a show last week telling people about DRV, RGK, going over the real estate market, but I haven't executed it yet, right? He went and executed. Now he's up 11%. Probably going to go up even more. And I was supposed to get it today, but I forgot. Crap, forgot about it. I didn't forget about it. I mean, the market closed before I got a chance to, because I'm on the East Coast. I mean, I'm on Central. I'm in Mountain Time, so the market closes at 2:00 in the afternoon. I'm like, oh crap, it's two. It hit 2:00 just came because I was busy studying, getting ready for the shows, and taking calls and stuff like that. And it slipped by me. But execute in business. What I learned, people think business is about what they know and who they know. It's your ability to execute at a high level. When you show me you can execute and deliver and do what I need you to do at a high level, that's what kills everything. That's what sets you apart. Because so many people talk, not a lot of people deliver. What is your opinion to determine if the stock is undervalued, overvalued? I'm looking at the finances, looking at the finances of the company, and comparing it to its competitors, right? Whatever the industry is, I compare it to its competitors. So if you're in a big industry, right? If you're in the restaurant, say if you're selling hamburgers, I would look at your finances, doing the ratios, who is growing the most over the last 5 or 6 years, who's having the most cash, who has the least a less amount of debt, what company is growing, and then I will compare you to the big boys, see how the big boys are doing, see how McDonald's and Burger King and Wendy's are doing. If you beat them out, then I'm like, ooh, this company's doing pretty good, right? What's up, Wes? Hey, what's going on? All right. Hey, okay. Everybody see you. Appreciate it. Thanks, man. Appreciate it. Homeschooling Chronicles, everybody. That's Wesley again. Michael said, right, penny stocks killed me when I first started investing. Do you think Tesla would trade for around 2000 one day in 10 years? It has the potential. That's the biggest mistake when you first get in. Everybody get these penny stocks. Everybody's looking at, oh, you know what? This company has a possibility to go up and go down, all of the good stuff or whatever. But yeah, I wouldn't do it. I'll leave it alone, right? Because those things are very risky. You know nothing about those companies. You have no idea what they're doing, what they got going on. You just jumping on them because they're cheap. Don't get caught up in the cheap stock hype. Don't be cheap when it comes to your investments. That's exactly what I did. I had a buddy come to me, hey Prince, man, I brought this penny stock. This company was 10 cents. Now it's up to 30 cents. What? 30 cents? Yeah, I can put a bunch into that. I didn't care about all the big companies. I didn't look at financial reports. I didn't understand none of that stuff. So get into that stuff. But can Tesla go there? Yes, it can, because it has a lot of room to grow. It's just financially, it's just not a good investment when you look at the financial data. So it makes it more riskier investor, Michael Davis. Silver line, next week could be a wild ride since the earnings reports are due. Yes, earnings reports have started coming out this season. We had Bank of America. I think JP Morgan just came out. Today, I forgot the name of that bank, but a lot of financial reports are coming out today. And next week, I think Wells Fargo came out today or yesterday, but they're rolling out now. And next week, they're going to, from now until May 15th, especially at the beginning of May, we're going to see a lot of the big boys start to report their earnings and stuff like that. Facebook, the companies, 5 companies that I look at are doing extremely well that are profiting off of this, that was profiting before and now. You got Amazon that was doing very good before the coronavirus and doing very good now. Netflix was doing good now. They're thriving in this economy. I'm very interested to see how Uber is going to do. Walmart and Target. Walmart and Target, those are 2 other companies that were doing, and Costco's, those companies were doing well in the bull market, and now they're thriving in the pandemic. You're seeing empty shares at Walmart like you never seen before. So yeah, those are my 5 companies. I'm very shocked to see how Uber is going to do, how they're going to pan out in this whole pandemic, and if they're going to still be profitable by December. I definitely want to see that. Right? Harloon Financials. Oh, he's speaking to Michael. Okay. Chuck Richardson said, I got BRKB. Now I want to get BRKA. You think the Cash App fractional shares will be a good idea? Yes, fractional shares. Cash App has fractional shares. Robinhood, I gotta do a video on Robinhood. Robinhood has picked up fractional shares and dividend reinvestment plans. So shouts out to Robinhood, even though they crashed and all the good stuff like that. I'm not a personal fan, but I leave my personal feelings out of it. But BRK, if you already got BRKB, you don't need BRKA. They're the same thing. Just one is $200, one is $200,000. So they both track the same. When you look at percentage wise, they both grow at the same percentage. If you take BRKA and BRKB and put them on top of each other on a chart, they pretty much track the same when it comes down to percentage wise. Just one is cheaper for the cheaper people, right? Okay. We got the Tech Monkey. Much love, Prince, for all your teaching. What do you think about GM? General Motors? I had them for a little while. Once I got off the Ford train, I got into General Motors. They did pretty good. Then they had some stuff kind of break out, and I just kind of got out of them, you know. But they're a pretty good company. They pay dividends, nice big brand, all of the good stuff. So I don't mind them, right? So UVV. Why that's Max B's asked me, says, Prince, what do you think about UVV? Let me look at this. Now give me 1 second. Let me look up UVV. Looking through my phone real quick. Universal Corporation. Hmm. That one don't look too bad. Max B. 1 second. Let's look up UVV. UVV Universal. Is that like the music company? Is it when they make the movies? This is the Universal Universal. Y'all think I should set something up where y'all can call in? Consumer Defense, tobacco. Huh. This is a tobacco company? That's kind of weird. Let's take a look at it together, guys and girls. I got it up on my Yahoo Finance. So this is saying that it's in the tobacco industry, employs 28,000 employees, consumer defense company, pays a nice dividend. It is profitable. Um, I don't know much about the tobacco industry. Tobacco industry. Okay. Why is it not giving me 2016? That's weird, but okay. It was like starting to kill my eyes. Okay. Expenses are not looking too bad. Gross profits. Okay. Let's see how much. Let's take a look at this balance sheet. Since I don't know much about this industry, okay. Cash pile is kind of stagnant or whatever, kind of staying the same. 297,000 in cash. Now let's see how much is in debt. Debt is not too bad. But you can see this company here, right? When I look at their cash pile and I look at their uh the the current debt is 54, right? That's cool. And then long-term debt is 368,000. So I'm looking at your long-term debt versus what you got in cash, 368, because current debt is what you owe within a year, right? Within 1 year is current debt. Long-term debt is what you owe within over a year. So current debt is not that high, but the long-term debt is a little high, right? Compared to the cash that the company has. Well, cash is yeah. So I don't like that. So I have to look at the industry. It may be something that may be common in that particular industry, but it's a tobacco company. I don't know too much about it. I don't like how that long-term debt is pretty heavy compared to what they got in cash. So I'm not too crazy about that. And the reason why, and another good one to look at too, is more so looking at the total current assets versus non-current assets. Current assets are things that can be returned into money within 1 year, right? Within 1 year. So that's the way I like to look at it. So hopefully that makes sense. Let me stop sharing that. So hopefully that makes sense because current assets is what can be turned, like, a checking account or savings. How much money can you touch within 1 year, right away? And that's important because if a hard time hits a company, how can that company sell all that crap and be able to pay their debt, pay their employees, be able to get by through the next day, versus current assets, non-current assets are things that, hey, it may be a CD, it may be something else, or whatever the case may be. So that's one thing I'm looking at. Yes, Harloon Finance Prince. I know you heard of REIT Reality Income. Oh, the monthly dividend income. Oh, yes, plenty of them out there. There's plenty REITs play monthly dividends. You got, so that's why they're good investing. But real estate right now, especially with the reports we were reading right now, I don't know. Edgar says, yes, sir. Edgar said, just jump in. Yep. Luke F said, appreciate your thoughts and insight on BLM. They got Outback Steakhouse, Carrabba's, and Bonefish Grill. Ooh, let me write that down then. Well, hold up now. That report was back into 2019. I don't know what they're gonna look like in 2020. I gotta look at their quarterly earnings because those companies those are some big names, but the restaurant industry is hurting right now. So the restaurant industry is hurting right now. So we'll take a look at that one. Bone says, don't forget to tell everyone not to invest when you are hungry. They may get upset when companies belly up. Yes, that's true. So I mean that's why I say looking at the financials of a company. The only way a company is going to belly up is when they don't have the money. That's the only time people, belly up, right? When you don't have the cash, you don't have access to capital, that's when companies belly up. That's why reading and looking at finances is so important. That's why the first thing, periods we think about this company, I look at the bank, how much money is in the bank. And when I'm looking at this bank, the balance sheet is only going to 2019, right? So I haven't seen first quarter earnings, how much money is in the bank, how much cash are they burning through or whatnot. So if I'm looking at your last 3-4 years when we was in a bull market and they look crappy, what do you think they're going to look like in a bad market? Um, he said, I may upset people, but I won't touch Teslas for as long as it's $195 and under. Unless it's $195 and under. Yeah, it's financially, no, I understand it's going up and going crazy. You know, Tech Monkey. So bumped how ABC Aurora Cannabis. Ooh, so bummed at how ABC Aurora Cannabis tanked. I didn't even know Aurora Cannabis tanked. A marijuana company tanked. Wow, I didn't know that. Right, right. Hey, what's up, Prince? Finally catch your live today, checking in from Honolulu, Hawaii. Derby Smith, what's going on, man? Thanks for checking in. Or whatnot from Hawaii. Max B said, "Yeah, get the phone line back running." Yeah, I'm gonna have to get my phone back up and running. Y'all might be able to call in and talk. Prince, what are your thoughts on F for the Feds pumping money into the market 2 to 4 times a month? They've been scheduled out for the next year. Typical stimulus. Stimulus. They did this back in 2008 to keep liquidity in the market, to keep pumping the market or whatnot. So I like it. Right. BLM sounds interesting. Yes, Bone. See, yeah, that does sound. I don't know how they look on the what you call it. I love your appreciation on all your. I love and appreciate all your positions. Appreciate it, Bones. I appreciate it. Appreciate that. Right. If I'm not mistaken, doesn't Tesla have billions on the balance sheet? It's not about what's coming in, Harloon Financials. It's about what's going out. They probably do got billions on the balance sheet, but they're probably spending billions on research and development. They got to research, they got to do development. You trying to put rockets in the sky, you trying to build new cars, but they're burning through cash like crazy, right? High print stocks just make you turn. Oh, they made a U-turn aftermarket, as in a good way. Danny P says high print stocks just made a U-turn in the aftermarket. You know, let's take a look here. Let's see what the aftermarket is looking like. Oh, let's see. I can't get my futures up. I don't want to take too much time doing that. That's nice. But you also see that Trump is talking about reopening the economy too. So that's why I tell everybody, that's the way to look at it. Nice. Let me get that off. All right, ladies and gentlemen, I'm about to get ready to wrap up today's show. Thank you for everybody for coming in or whatnot, right? Thanks for everybody for your thoughts or whatever the case may be. You know? So look at this guy, Richard A. Shee. This is a guy who he comes around. This guy here, he comes around. He wants to. I don't, what he has or what his objective is or whatnot. I guess he really loves the show. He tunes in, he writes, and he tries to comment, tries to combat everything that somebody says and all of the good stuff. And I look at it this way: if you got your own position and you're getting rich, go get rich. I'm not telling anybody to do anything different. It's a financial literacy show, financial education show, right? Everything I've been putting out over the years is no secret. Years, not weeks, not months. Like I said, publicly been 7 years, right? So if you got your own opinions, have your own opinions. I welcome everybody's opinion. Like God just taught me, Luke F just taught me about BLMN, right? So I appreciate that, right? I don't know everything, and I will never know everything. But if you want to like come in and you want to talk and share your opinion, share your opinion. But if you want to come in and try to down talk people that's in the thing, down talk what people are doing, I don't understand that. I don't. That's why I don't allow people with negativity. I don't do that in my life, right? If you're negative in my life, if I know you personally, if you're negative, I don't even talk to you. I don't have negative people in my life, right? Luke F said, appreciate your thoughts on BLM. They got Outback. Okay, I already did that. I'm sorry. I'm reading the same comment. Okay. Prince, what are your thoughts on Q? Okay. It's too late in the show. I'm not going to look up another one. It says, Prince, what's your thoughts on QYLD? It's a tech heavy and was doing good before the market. Can't see it doing good right now. Okay. I won't look into another one because it's too late into the show. But I'm gonna have to get in, go ahead and get up out of here. My eyes are starting to kill me with all these lights and reading you guys' comments. But you know what? I may turn that back on to the show. Right? Edgar says, thank you. Tesla's a different company from SpaceX. I thought it was part of, they had SpaceX in there too. Or did they break them off and their own entities? But yeah, but I don't know all the way their business all the way, but they burn through a lot of cash. That's what's killing them. It's not the money that's coming in, it's the money that's going out. So, but anyway, ladies and gentlemen, let me get out of here. I appreciate everybody for tuning in, dropping in the comments for today's show. Tomorrow, we're going to have James Fortland, 40-year Wall Street vet, is going to be here. Y'all know him, Uncle James. He's a friend of the show. He always coming to the show. Y'all know he's going to bring some excitement, his own ways of looking at things. So, we're going to take a look at it. He said, Nicole M. trolled. They will appreciate what you do, Prince. Yeah. I don't understand that. I mean, the logic behind trolling. Look, when somebody trolls you, let me go ahead and give you my thought process on that, Nicole M. When somebody trolls you, I mean, that just happens in social media because people can hide behind a keyboard and say whatever they want to say about you or whatever, and they build some type of image of what you say. And some people just start to blatantly just lie because I can't lie because everything I say is recorded, it's on videos, on podcasts, everything that I say, right? And when people troll you, it's just showing, they had nothing else going on. Because with me, I would never be in somebody else's DM podcast, whatever, and I don't like them, right? I don't like you. I think you're an idiot. I'm not going to be sitting there wasting my time trying to go in. Hey, look at you. You're crazy. You're for what? For what? That's me. But people do that because they think you are that important. That's how awesome you are. It's like people become infatuated with you. I don't know what it is. I don't know what it is. I love you so much till I hate you. Because I definitely won't be in your life if I hated you. I won't be talking to you, trying to run you down and, hey, look at me. Hey, look, I'm good. I'm blah, blah, blah. And I tell people DM me all the time and they write me, hey, Prince, I'm doing good. Good investment. I tell people, great on you. Whatever you make, I'm happy for you. If you learn something from me, if you don't learn something from me, if you take something away from this show, it's a community of investors, right? You do good with it. If you figure out a secret formula, go get rich. Go get rich. Don't tell nobody else. Because I guarantee you, if I'm sitting over here, if I'm whether it's option trading, day trading, or whatever you're doing or whatnot, you know, that's what it is. So the people that's been following me for years, everybody know what my stance has always been on Bitcoin. Everybody know what my stance has been on Bitcoin. Everybody know what my stance has been on cryptocurrencies. What my stance has been on a lot of things, right? Marijuana companies. I may interview people to do that. Um, I may interview the CEO of a marijuana company to bring in a new perspective. I may show people to talk about Bitcoin to bring in a new perspective, but my personal take on it, I'm not crazy about it. Like Bone says, great show, Prince. Anytime. He said, "Love you. Hope to see you after the close tomorrow." Yes, we're going to be open. We're going to be doing that interview. I think it's going to be right before the close, right after the close. Vanessa says your shows are so helpful. Hopefully, glad I can help you guys and girls out. But anyway, I thank y'all for tuning in today. Today was a great episode. I love coming in here talking to you guys and girls, and I will work on becoming more scheduled. It's just that once I got into the quarantine, my schedule opened up because I spend a lot of time at home now. So I started doing live. I didn't set a time for it, and I didn't want to set a time for it because I know once the economy opens back up, I won't be able to do a live every day at 11 o'clock, right? So, or whatever the time it be, because I'm actually do the military, so my schedule shifts. So I won't be able to do a live every day after that, right? So that's the crazy part. Anyway, love you guys, appreciate it. Wherever you may be catching this at, whether you love or hate the show, whatever you tuning in for, I don't understand it. If you do hate the show, it's a million other YouTube channels, it's a million other podcasts, it's a million other Facebook pages, Instagrams. You can watch TV. You got CNBC, Yahoo Finance. You got so much. It costs you nothing to pay me no mind. So it costs you nothing. So. But I just see people they give you so much attention and they say they dislike you. That's crazy. I think they sit at home in their basement and they watch you so much that they love you so much that they just hate you. It's crazy. But anyway, ladies and gentlemen, boys and girls, I'm out of here. I thank you guys and girls for tuning in. I don't want to give more attention to negativity. I want to give attention to all the other people, all the thousands of people that's tuning in that has positive things to say. So I appreciate it. Thank you guys and girls for tuning in. Good investing. Remember, it's not what goes in. It's all about what goes out. So until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe. Peace. Be safe. I'm out. And thank you.